everyone. Mike here, and I want to go over today's economic or market report for you guys so that we guys get a good gauge as to where mortgage rates are doing today. We'll start with economic reports being released today, and today we got inflation on the consumer level, also known as Consumer Price Index or CPI report. The Fed's favorite gauge is actually the PCE or Personal Consumption Expenditure, and what they heavily look at are the core and data from these. So you got the headline number, and then you got the core of those numbers. And the core is where you exclude food and energy, which are volatile uh, entities or variables that are factored into the headline number. But when you remove those, you get your base, and that's kind of what they want to look at. So with that in mind, let's take a look at the December month over month, or I'm sorry, the month over month consumer price index. So we have here the it grew up back in November, month over month, 0.2%. Forecast is coming for 0.4%, and it did come in at forecast. And it's the year over year came in at was at 1.2%. Forecast coming for 1.3% increase, and it came in at 1.4%. So the headline number is at 1.4%. However, when you strip out the food and energy, we got the core. So its month over month was a lot more tame. We also had a 0.2% increase for the month of November. However, forecasts account for much more mild at 0.1%, and it came in only at 1.1%. However, as you can see here, it remained at 1.6% year over year from November, and you got the forecast also count for the same thing. So it remained unchanged here for the duration here. Now, the Fed typically likes to keep inflation rate around 2%. They initially said they want to do a weighted average of a 2.5%. So we still have a little bit of a ways before we can kind of see any movement that might really kind of scare investors here. So let's jump ahead here, take a look at headline news. Stocks are up this morning. They were in negative territory early on yesterday, and then reversed and basically did a 180 and closed up in the positive territory. We got a lot of market uncertainty, so we got some volatile swings going on right now, and they're talking about another impeachment because of Trump being blamed for the incitement of violence last week. Personally, I think it's a little exaggerated, but in any case, there was a situation that happened, and it's like anything, it's politics. So a lot of the market is sitting on the sidelines, and with this uncertainty, so you may not see anything really happening until after the inauguration, once we get back into things, hopefully, and less distractions, and then we might be able to see where things move along here. There's kind of waiting to see if we can get a larger stimulus. There was talk about a $2,000 stimulus check going out to the people. I don't know if that means that will be including that $600, so maybe going from 600, so maybe people get another $1,400, or if that means another 2,000. So it remains to be seen. But what goes. So now that we got one party in control, basically they can write their own tickets and get things through without any, for the most part, really any opposition. So with that in mind, let's jump to see how mortgage rates are doing today. We got pretty big growth here, actually. It's up 19 basis points currently. And then since I've kind of was putting these together, I noticed on the 30-year, there was a 30-year bond auction, and it went well. And this actually spiked up 28 basis points. So what does that mean? Mortgage rates are improving. We do have an improvement today. We hopefully found a ceiling or a floor here. Hopefully this was a floor, and we're able to bounce back and maybe get a little bit more recover a bit from what we've been experiencing over the last week and a half. Let's look at yields here. Yields kind of did the same thing. Hopefully we found a ceiling here, and it's coming back down. It's down below its next level here, technical level, and we're seeing it at 1.098, so just under 1.1 basically. Again, we got some room here. This is where the 25-day moving average, we could potentially even come back down here to kind of close up all this. But we'll have to wait and see if we do, especially when we had a huge gap here opening a while back. So maybe we might close that before we kind of gradually work our way back upwards. The trend will be going upwards. We will most likely see rates continue to rise at some point, but it's not going to be in a straight line. We'll see some ups and downs in that process. But in any case, try to take advantage of it. So, anyways. Hope this helps helps you. Mortgage rates are a little bit better today than what we've been seeing the last couple of days. So that's obviously good news. If you guys need any assistance with anything, whether if it's questions you guys got regards to mortgage, that a little bit about myself. I am a loan officer and I do work with a national lender. So if I can answer any questions for you guys, or if you guys want me to look at any pre-approvals and financing for purchasing, or if you guys are looking even uh, rate refinances, looking to get better rates, or just need to take some money out of your equity of your properties, I'm here. I could certainly take a look at that for you guys. Just feel free to reach out to me. Soon I'll get a link up for a better way to contact me. But in the meantime, just go ahead and leave a message, or maybe direct message me through the social media site you found this video at. All right, you guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys in tomorrow's video. Bye bye.